It is interesting, Liz Young, the market reaction, because if the market is overly concerned about rate hike projections being pulled forward, it certainly isn't showing it, albeit a pullback in the Nasdaq simply because rates have moved higher in the last hour or so. And by the way, Powell's renomination was basically base case for Tom Lee, suggesting that we can go past 4,800 even by the end of the year. So the market doesn't seem too concerned with the fact that we've now decided that there's a 50% chance of rate hikes starting in May.
Yeah, I think to Steve's point, we have to let Powell see this through, right? He started these policies, let him finish it. And one of the things that we know about him is that he likes to signal the market very, very clearly. So if you just play this out on a timeline basis, what I think is going to happen, we'll start to hear about an accelerated taper maybe before the end of the year. Let's say that starts in January or February. They accelerate the pace of the tapering. Let's say they finish tapering somewhere around the end of April. Then we start hearing about the very specific things that he's going to look at in order to decide on rate hikes. And we will be very well signaled, just like we were very well signaled for tapering, if and when that finally starts to happen. I don't think it starts to happen until fall. And I think that's part of what the market is saying here is that, you know what, we're not going to be surprised by some mistake rate hike that comes and catches us off guard. And I think that's a positive.
Steve, I mean, I guess, look, it also has to ease Powell's decision, at least somewhat, on when to raise rates if he thinks that the market is going to be able to handle it. You know what I'm saying? Not that the market activity is necessarily going to guide his hand, but he doesn't want the market to fall out of bed either.
I'm assuming that's me, Steve, you're talking to, and not the other more famous Steve, Steve Weiss.
Yes, my bad,
no
Steve Leisman.
No worries. I think that's right. I think he's played it very well, though, Scott. He has learned from Bernanke, learned from Yellen, this idea of being incredibly transparent, laying out what you're going to do, creating benchmarks for the market to price in. And the idea that we haven't yet freaked out. I say yet because who knows if the guys on this committee are going to come in one morning and say, oh, my God, the Fed is going to raise in 6 months. But if you look at the 2-year, over the course of this regime of it being at zero, and compare it to zero under Bernanke and Yellen, what you find is that the 2-year was much better behaved. The market was not looking over its shoulder the entire time and saying, Powell's going to hike on us at a time we don't expect. It's only now reached that level of pricing in that first or that second rate hike that's out there. That 50 basis points was there during the entire time, or most of the time anyway, that Bernanke was at zero. So Powell's figured out a way to talk to the market in a way that it believes him and in a way that it gives him the flexibility to react. And the idea, I think you make a really important point, Scott, that the market has sort of priced in these rate hikes next year and remained at a relatively high level. I mean that by way of stocks, is a pretty good accomplishment by the Fed chair, and that's a good reason for his reappointment.
I mean, Steve Weiss, you can argue with the policy being around too long, but it's awfully hard to argue with the messaging from Powell because it was the most telegraphed taper ever. And by the way, there's commentary right now from Marko Kolanovic over at J.P. Morgan, who says Powell's reappointment reduces uncertainty and hence should be a positive for risk assets. Tapering is less worrisome for stocks than in 2013, as concerns about excessive hawkishness are unwarranted and the growth cycle appears more durable. Your thoughts?
I agree with everything you said, which is that, yes, Powell's been absolutely transparent. He's been a master at communicating the message, and he really hasn't wobbled on it. I mean, you can argue whether he's stuck with transitory way too long and is still sticking to it, although we're seeing some perhaps blemishes on that. But the market has been able to trust what he says and not have any fear he's going to contradict himself at the next meeting. So the consistency of that transparency is equally as important as the messaging.
Yeah. Steve Leisman, thanks so much. We will talk to you, I'm sure, in the days ahead. I look forward to doing that as well.